Hello, everyone. Thanks for joining and welcome back to Wall Street Silver. Joining us today is the founder of Adrian Day Management, the man himself, Adrian Day. Welcome back, sir.
Well, thank you for having me, Ivan. Good to be back.
Yeah, it's always fun having you on to talk about all the economic turmoil that's happening in society. I read an article this week. It said that Americans under 25 racked up more credit card debt than any other age group last year. So, how will the younger generation start building wealth, Adrian? Will they start with silver, gold? How do they start?
I mean, personally, I think people should always start by accumulating physical gold. Physical gold to me is the foundation of a financial, I won't say a portfolio, but of a financial well-being. And as you and I both know, you can buy 1 ounce coins at a 2,000. You can buy half ounce, quarter ounce. I
Hmm.
mean, there's lots of ways of buying gold that aren't going to break the bank, but you can start. So that's where I would start with physical gold. And after you've got some physical gold, I'd then have some physical silver, which is obviously a lot less expensive per unit,
Hmm.
and then move on to the stocks.
Absolutely. Has silver bottomed right now, or is there more downside to come? There was a little bit of a drop in the 200-day monthly average, but what do you see happening in silver now?
Yeah. I mean, as you and your listeners know even better than I, because you're the silver bugs. Silver has underperformed this year. It's underperformed gold on an annual basis, but in particular, it's underperformed since the peak in April. Its loss is about double the loss of gold. When I look at silver, obviously we all know it's an industrial metal, there's industrial demand, and then we all know it's a byproduct. We've talked about that before. And
Hmm.
so there's factors on the supply and demand side that are different from gold. But yet, despite that, the main factor that seems to influence the silver price over a period of time is the same that influences gold, and that is the monetary factors. The monetary factors are the most important. And silver does tend to underperform on the downside, overperform on the outside. So if I can flip your question around, what I would say is, have the precious metals bottomed? Because if they bottom, silver's likely to outperform in the next 12 months.
Hmm.
I think we've got, I still think, I disagree with a lot of my good friends on this. I still think we've got some downside in gold. And the downside comes from two areas. The downside comes both from the fact that I think the Fed is going to raise rates again. And again,
Hmm.
most of my friends don't agree with me on that. But you listen to Powell this morning. He said that he doesn't think we're going to get 2% inflation until 2025.
Wow.
And so Powell was quite clear at his last conference. I'm no defender of the Fed, as you know,
Yeah, of
and I'm no
course.
defender of Jerome Powell, as you know. I think we have to have a reason to say we don't believe what he's saying.
Hmm.
And I suspect that we're going to get another one or two hikes this year. That's negative for gold. And the other thing, of course, is the Treasury issuance. We had very little Treasury issuance in the first half of this year as the debt ceiling negotiations, discussions, whatever, went ahead. Now that they've lifted the ceiling, what an abysmal result. What an abysmal result.
Yeah, it's
But now
bad.
they've lifted the debt ceiling. We're going to have the Treasury issuance start to catch up. So some estimates say that the Treasury is going to issue 2 trillion of Treasuries this year. What that does, that's negative for gold and silver because it withdraws liquidity from the system. So those are the two main reasons that I think that are going to certainly weigh on gold and silver in the near term over the next 2, 3 months. There's factors offsetting that,
Right.
such as the dollar's looking remarkably weak, given the economic circumstances and where US Treasury rates are. The dollar's looking very weak. China's stimulating. There's lots of factors on the opposite side, but those two factors are certainly weighing on gold. And let's not forget, we've had a lot of buying of gold from the central banks over the last 12 months,
Right.
whereas we haven't had, and we've had physical buying from retail. we haven't had a lot of buying of ETFs. The ETFs have been net outflows for most of this year, and they continue to be net outflows. The only time we saw inflows was right in March, right after the invasion of Ukraine. And so if the market is depending largely on one source of buying, central banks, we should also be aware of the risk that can change, even if only for the short term. And so the last month's numbers that came out, was it April or May? I forget. But the last month's data that was released showed net selling by central banks. And Turkey, which had been a major buyer, was a significant seller. So all I'm saying is there is risk on the downside in the near term. I couldn't be more optimistic on gold and silver.
Why do you think Turkey is selling that amount of gold with all this economic turmoil? And you could, like, let's say you said obviously the Fed will continue to raise rates, but let's say in 2024, 2025, they do pause and lower it down. Why would Turkey sell all their gold or continue to sell a massive amount?
Well, they've only sold a part of their gold,
Right.
but I'm not an expert on Turkey. But I mean, you've got an economy that is in trouble and government finances that are in trouble. So when you have government finances in trouble, you look for places to raise capital. So one way a lot of countries can raise capital is simply to sell the gold that they have. It's short-sighted, I agree with you, but if you need capital, you've got to sell something or issue more debt. And if you're Turkey, issuing more debt is very, very expensive right now. But I think, the scenario for gold and silver over the next 2-3 years, which is that the Federal Reserve is going to stop raising rates, even if they don't pivot immediately, but they're going to stop raising rates, and eventually they're going to lower rates before inflation is down to 2%.
Absolutely.
And that is the central bullish factor for gold because, for all the reasons we know. That puts more liquidity in the system. It sees the dollar coming down. It changes the sentiment towards the Fed. So for all of these reasons, that is extremely bullish. I don't think anything has changed that central thesis. There were clearly a lot of people who were too optimistic a year ago when they remember Jerome Powell's pivot from 2018, and they were too optimistic. But there's no question that as time goes on, that thesis is we're getting closer and closer to when that's going to happen. The Fed is going to stop raising rates before they have the core PCE, which is their target, down to 2%. And that is going to be wildly bullish for gold and silver.
Absolutely. And you see everything that's happening in Europe with the Ukraine war, and it has been going on for 16 to 17 months now. And, thousands and thousands of people have died. If this war keeps going into going on into 2024, 2025, or just during the elections in 2024, will the US just keep sending billions to fund Ukraine? How does that affect precious metals and inflation?
I'm not sure. Well, I'm not sure that the geopolitical event in and of itself geopolitical events tend not to have long-lasting effects on gold. A lot of people think a war should be good for gold, but the truth is that geopolitical events tend to have very short-term impact on gold. And we saw that with Ukraine, certainly. We had a 1 month when gold spiked, and then, 3 months later, 6 months later, it was down meaningfully. From an inflationary point of view and a budgetary point of view, if and I don't want to get into Ukraine and should we be sending money to Ukraine or anything like that.
But
of course. Any meaningful expenditure by the government when we don't have the money to spend is negative for obviously the federal budget, but is negative for inflation and is positive for gold. And it's interesting that this farcical debt ceiling agreement, I say farcical because we lifted the ceiling and we didn't cut spending.
700 billion they spent.
Yeah, to say that to say that when you look at the federal budget, from 2.4 to 4.4 in 4 years leading up to COVID. And now we say, well, we're going to keep it where it was. It's already too high. The debt level is already too high. The deficit is over 7% of GDP. That's extraordinary. And so, you know, any excess spending, and already, as you indicate, you know, people are saying, well, Chuck Schumer, Senate leader, is saying, well, Ukraine isn't going to be covered by the budget deficit, by the deficit agreement because whatever is so important. He also said that domestic priorities will not be included. Well, basically, nothing's included then. What are we going to include?
Oh, they're crazy. I'm telling you, Adrian, they're crazy. And I read an article from the legacy media this week saying the article actually said investing in gold is dumb. Stocks are better than gold for both generating wealth and offering protection against inflation. Why does the legacy media write these type of articles against gold?
I think, first of all, they don't understand it. Secondly, it's not hip. You're hip. But most people who invest in gold and silver, you know, it's just not hip. It's not an interesting story, right? I mean, it's not changing on a day-to-day basis. The thesis for investing in gold, I mean, I think that's it. And it's just out of favor. It's true to say that theoretically, stocks can build more wealth than gold, but gold and silver are not meant to produce wealth. They're meant to preserve wealth. And they've done that, you know, this year, gold is up 5%. That's not bad for an insurance asset.
Yes,
you go
that's
back
really
to 2000, gold is up. You go back, 1,000 years, literally. I've talked before about Roy Jastrom's book, The Golden Constant, where he goes back to 1250. That's not quite 1,000 years, but it's 800 years. He goes back to 1250 and looks at year by year what the price of gold was and what the cost of living was. And you see over 800, and the records are very good. In England, the records go back to 1250. And they're very good records. And he also discusses the period before that, but the records aren't so accurate. But from 1250, you can look at year by year what the cost of living was, what the price of gold was, and you see that gold has preserved its value. And that's what is purchasing power, and that's what it's meant to do. If we want gains, we should be looking at gold and silver stocks, of course. And on that point, I will say that, you know, I'm very, very bullish on the gold stocks. They're remarkably cheap. But the silver stocks, the stocks that have silver in their name, even if only 30% of their production comes from silver, but they're thought of as silver stocks, right? Like even Wheaton has that silver, a bit of a silver image to it, but Pan American, Fortuna, we all know the names. Those stocks are remarkably undervalued right now, remarkably undervalued.
Is that where you're finding value right now outside of physical gold and silver? Like, which is that the ones you're investing in?
Yeah, we are investing in gold stocks as well. I mean, right now I'm more focused on the major stocks for the reasons we've talked about before, because when gold turns and the sector turns, the major stocks, both the miners and the royalty companies, but the major stocks, first of all, they will tend to move before the juniors. And secondly, they are more certain to move, right? We've talked about that before. If you buy Barrick and Agnico and Franco and Wheaton, you can be pretty sure. But if gold's at 2,500, those stocks are going to be up meaningfully, right? You can be pretty darn sure. If you buy Ajax Exploration and Consolidated Moose Pasture, they may or may not go up if gold's at 2,500. So the seniors are more certain to move and the first to move. So you look at Agnico, you look at Barrick, you look at major miners like that, and you look at Pan American, B2 Gold, second intermediate, I guess, not a major. But those stocks are selling at basically 20-year lows of valuation, or
Wow.
very, very close to 20-year lows of valuation at a time when gold is at 1950. That's not such a bad price. And if you're all in sustaining costs at 1250 and gold is at 1950,
No,
you've got
that's
a
great.
pretty healthy margin there.
Yeah.
I'll send you a graph that shows that. They're not the highest margins ever for the sector. This is the entire XAU, but the margins of the XAU, which is the whole industry, not just one or two select stocks, are close to the highs. They're not the absolute highs, but they're close to the highs. And so when you think the margins are strong, when you think that gold is at 1950, when you think the outlook for gold and silver over the next 12, 18 months is very strong, for the gold stocks and silver stocks to be trading close to 20-year lows in valuations is just ludicrous.
Yeah.
Now, I know I said that 6 months ago when we talked, and I probably said it a year ago when we talked. But the point about gold and silver stocks, as we know, when they move up very, very dramatically.
Yeah, absolutely. Well, Adrian, it's been a huge pleasure having you come down to Wall Street Silver, and hopefully, as the market develops and we're watching the silver and gold price closely with you, we can have you back on. We would love to have you back on.
I'd love to. Thank you so much.
Awesome. Talk to you soon, Adrian.
Okay, thank you.